Hi everyone, George here. Can do tax. I'm hoping everybody can do tax. I remember once upon a time we were being told that income tax in Canada was a self-assessable system, meaning that you could pick up a tax return from the post office back in the days prior to computers taking over the income tax return preparation process and working remote and all that. You'd pick up the tax return from the post office, open it up, fill it out using pencil and paper or even pen. Accountants used pen. I love pens. I have a Coleco here. Not the expensive variety, aluminum or brass, just plastic, dark blue. Writes excellent. So you'd pick it up, read the guide, and away you go. Now, the reason why I'm mentioning this now is, well, tax season is around the corner, and there's big talk about increasing the old age security by 10%. And of course, for some peculiar reason, all these folks that are in the liberal camp um, are saying that's not a good idea. You'd think they would be on the side of the poor and everybody else would be, I don't know. I don't know. If you're in politics and you're not supporting the least fortunate, I don't know why you're in politics. But anywho, I don't want to make this video too political. But there has been some truths and untruths brought up, and we want to add some clarity here. So first and foremost, um, this term has arisen called generational fairness. So the older generation was in a situation growing up where they could afford a home and save up some money as a nest egg, and life generally was more affordable than it is now. There's no contesting that. However, the reason why is pretty interesting to note. Why? What's the difference between then and now? Number one, and number two, why shouldn't the government prop up um, an income for people living on fixed income that are not readily capable of returning to the job market or running a gig to supplement their income? And is this part of generational fairness, or is that a buzz term just to divide and conquer the population? Um, and there were a couple of untruths spoken saying, oh, this income is not being targeted to the right group because if you top up the old age security, households earning $100,000 or more will end up getting this money, and this is not your target audience or your targeted group, um, which is better off. I'm sorry, but if you're living on fixed income and the inflation rate just rose above the indexation of your pension, you did suffer a, a, a setback, a big setback. And with respect to the generation, they can always supplement their income by a gig or uh, attaining a second job. And what will happen if another setback arises? What will they expect? A new handout? Hmm. As for seniors, the major untruth or fallacy that was put out there by, I guess, the government spin doctors is that households earning 100,000 will receive that income, and so be it. However, there is what they forget to mention is there a clawback. So after a certain threshold, that old age security, not only is it being taxed, but it is expected to be repaid. So the way the mechanism works is that after a certain threshold, if you receive that income, you simply repay it. It's not subject to tax, but you have to report it on a tax return. Um, Clawback. And I'm going to demonstrate this using our planner version. This is the professional, a professional tax preparation software called DT Max. And in DT Max, you are able to, after July, I suppose, there's a release for the future taxation year, which is not a complete version, but it's based on estimates or guesstimates as how 2024 will look like. So we'll do a simple return for a widower that's earning about, let's say, $80,000 to $90,000 of taxable income. So we'll do the narrative and do the numbers and see how things work out. But before we get there, how much is the old age security and qualify for it? So basically, as the news outlets have said, the federal Liberal government already topped up the old age security for seniors 75 and over. So if you're 75 and over, your maximum monthly payment is $800. What does that mean? I'm not sure if anybody else in Canada uh, has witnessed this in these stores, in retail stores, where they say, hey, you can buy a pair of shoes in our store starting at $60 and up. And then you go to the store and you don't find any shoes that are $60. You find shoes that are a minimum of $120. And when you ask them, where's the $60 shoes? They say, kind of, not that I go looking for $60 shoes, but they say, oh, they were all sold out. So that is the maximum, meaning you can earn, depending on your income, a lot less than 800. And if you're 65 to 74, 727 and 67 cents per month maximum. Now, that alone doesn't pay the rent. So you definitely need another source of income in order to make ends meet. And there is a non-taxable old age security supplement, which can top up your income to roughly below poverty levels, depending where you live in Canada. But if you look at the table all the way to the right handmost column, so it says, you have to be earning less than 148,451 to receive the OAS to begin with. And as well, the top, if you're over 75, it's 154,000. So long story short, there are thresholds to receiving this income. However, if you are well off and you're filing an income tax return, don't expect A, not to pay taxes, and B, not to repay a portion of your old age security back to the federal government. So for the purposes of this example, we're going to work on a widow. So the way the program works is you go to data entry. No, that's Stuart Little. That's another example I did. So go to File, Add New Client. And let's call this client 2024-10-05, which is today's date. Okay, and let's continue. I typically don't use that menu. It's very simple and straightforward to use. This is a little burn that I got cooking. Last name, Jennings. And first name, we're getting right into the crux of the matter. Nancy. So Nancy Jennings is a widower. And her social insurance number, this is a fake social insurance number, but it's valid. And her date of birth, let's make her 67. So 2024 minus 67 is 1957. So let's put 25 of September 1957. And the status is widow. She has been widowed for 3 years. You don't need gender, but we can mark it down. And she lives in Ontario, in sunny Ontario. Okay, and before I go any further, it's interesting to note that the ultimatum for the 10% top up, we don't really know if they're proposing a top up to the 800. So for $800, that would be, here's my calculator, for $800 would be, let's do fractions rounded down, 800 times 1.1 that would be 880 bucks a month instead of 800. And for the lower amount, 727.67 times 1.1, 10%, yeah, it would be a straight up 800. Anyway, let's use 880 as an example of how much old age security they would receive. All right, so living in Ontario, phone number, fictitious phone number. Everybody can see that. And we'll put 1234 my street and Ottawa. Shout out to Ottawa, Ontario. I know the postal code there is K something. Okay. Now we have the a basic taxpayer. You could save it and look at any diagnostics that may arise, missing metropolitan area, let's say outside of the metropolitan area for the famous carbon tax rebate or credit. Authorization, I don't authorize. Authorize and no. Let's see. That clears up all my diagnostics. And now let's put in T4 T4AOAS. That will bring up the T4AOAS. Net OAS pension. That's the taxable pension. So 880 times 12. I can do the math right in the cell. Would be $10,650 a year. Can anybody live off of that these days? I don't think so. All right, now let's say that she also worked, so she received the Canada Pension Plan. Add keyword, and T4AP is where the Canada Pension Plan would be reported. Let's say retirement benefit would be $10,900 for 12 months. And she also received the, because she's a widower, a survivor benefit, which was a portion of the late spouse's pension, would be 8,890. I'm coming up with fictitious amounts here, all right, based on my previous work history where I used to do so many returns, I can come up with typical taxpayer situations, I suppose. All right, and she received another pension from a T4A, a registered pension plan, to the tune of, well, let's say this is from the Royal Bank of Canada. Here, province is Ontario, and dental benefits, no. Registered pension plan, let's say $37,800. Okay. And let's add to that a T4 RIF, or RIF, from the Royal Bank of Canada again. In provinces Ontario, taxable amount, taxable amounts from a RIF, another $45,800. Um, so we got 45, 37, and 20. How much does that give us? Let's see. 45 plus 37 plus 20. Oh my God. Let's see. Let's do that again. So 45 plus 37 plus 20. There's $102,000 worth of income there. Wow. So there's a couple of things that will arise in this situation, and a couple of things that I would expect to see on the income tax return when I'm checking it to make sure that it's done correctly. I would expect to see that a portion of the old age security um, would be clawed back. That's the crux of this video, the clawback. Number one. Number two, I would also ask the taxpayer if she was asked by the CRA to pay installment payments. She's 67 years old. She's been living on fixed income and there's no deductions at source. Chances are, with this type of income, she would be asked to pay her tax in advance by the CRA. And if she didn't, she would be charged installment payments, not installment payments, but interest on the missed installment payments. That's a nasty surprise. So always make sure you ask the client, the taxpayer, if they had um, installment payments and if they were made. If she has canceled checks or income statements to that effect, do keep a copy in the file just in case the CRA didn't receive a payment. You can challenge the interest, maybe on humanitarian grounds, on hardship grounds. Got to do your homework. So let's take a look and see if George is right. I didn't recalculate the return, I just redid it. Typically, what I tell clients to do is go to tools, recalculate, and notice there's a big tax liability there. Where does the clawback arise? So here is the income. We estimated it to be 102. It's actually 113,000. Well below the threshold where you do not get any um, old age security. However, what is this deduction here for? $3,442.95. When I double click on this amount, it takes me to the work chart where social benefits repayment, aka the clawback, is calculated. So you have old age security of 10,560. Now, the clawback is not only with respect to old age security. If you received EI payments, you could very well be subject to that as well. So the other items that are subject to clawback are the EI benefits and the universal child care benefit that was um, the go the go-to top up for uh, the child tax benefit, the precursor to the child tax benefit. So we have $10,560 worth of old age security. Net income is $113,950. We do the math, which is subtract the OAS benefit base amount, which is at which point you start repaying back the old age security. Um, we're left with 22,953. Of that, you take 15%, and here's the amount that is clawed back. So of the 10,560, 3,000 is clawed back, and 7,000 remains in your pocket, which is taxed. And where else does the 37442 arise is at the end of the return, it's added to your tax. There you go. So ultimately, the person's tax payable, after all is said and done, you have around 20,000. You subtract 15% of your unfundable tax credits, net 16, add the 3,442, add the provincial tax, and there you get a round figure of around approximately $30,000 worth of tax to pay back, inclusive of $3,400 of OAS clawback. So, what's to say and what's to do? Folks, if you have elderly parents or relatives, they are hurting financially like everybody else. They're on fixed income. They deserve all the love they can get. So do listen to them, call them, invite them over for dinner, give them a hug while you got them, and take care. What else can we do? Take care, everybody. Hope you enjoyed this video, and do tell your friends about this channel. Like and subscribe. Take care.